And thank you, everybody, for joining this month's Retirement Genius Brainstorm Study Group webinar. We're going to talk today about the generational wealth tsunami that is happening as the baby boomers are aging, as the Gen X is aging. Uh, we have started now in 2025 the point where the baby boomer generation is now turning 80. Those people that started turning 65 15 years ago at a pace of almost 10,000 a day have now crossed the threshold where they're hitting 80, and the first Gen Xers are hitting the age of 60. So we have a huge wealth transfer that is going to be taking place, and we really need to spend some time talking about an area that is oftentimes ignored, taken for granted, and that's estate planning strategies. Too often, people ignore this critical part of their retirement planning, their wealth management, and we're going to focus on that today. Retirement Genius is an information and resource platform helping people to achieve a well-balanced retirement through the balance of their financial planning and resources, health and long-term care, and lifestyle. It's our belief and what we work on every day to bring these together in balance so that people can retire like a genius. So when it comes to taking a look at the framework of estate planning, let's start with the simple fact that all of us are doing this. We work our lifetime to create, generate income, save, invest. We're building businesses, working in companies, acquiring valuable assets over the course of a lifetime. And as you get into your later years, that can start to accumulate and be of some significant value to your next generations, not only to your current state of retirement, but to passing on to those next generations. And as we sit here today, when you look at the statistics, over the next 20 years, we're going to see almost $85 trillion of estate value transferred to heirs, and some of it also transferred to charities and other causes. And how that's going to transpire is critical, because not enough thought and planning is put into that eventuality. I'd say two of the areas when it comes to retirement that are most overlooked is long-term care planning and then estate planning. Those two areas are always seem to be kicked down the road to be thought about later, something that we don't want to deal with today. We'll get to that one later. And because of that, mistakes are made. There's poor planning. There's a lack of documentation, lacking wills and trusts in place, incorrect positioning of things like retirement accounts that can have significant impact if they're passed on to heirs in the forms of taxes and lost opportunities to maximize what is handed over to the next generation. People not taking advantage of gifting opportunities and ways to mitigate the estate tax impact that would come later by gifting some monies while they're still alive, and oftentimes the misunderstood uses of insurance and annuities as part of the mix, not only at the beginning protecting a family, but all the way through in the different ways that insurance creates value for the insurance policy owners and the beneficiaries. So as advisors, this is a great opportunity for you. You should be playing a role in helping to ensure there's a smooth transfer of estate value, generational wealth from one to the next. And this creates opportunities for you by playing a value-added role. As I always say to those that we work with, you always want to be seen as more than just a salesperson who's selling your product, your service. You want to be looked at as a broader expert who is helping to create and bring solutions to the table, to the bigger picture. If you want to see your business grow, you want to be looked at as a trusted advisor, as a solution provider, and not as a salesperson that they think of when they think, oh, what's that product that person sells that we should give a call to? You want to be playing a crucial role throughout, because this gives you not only an opportunity to help your clients, but you start to create a connection into their heirs. This is a way to help develop more business and assist people with financial literacy, which is greatly lacking in this country. And estate planning and the elements of it is a part of financial literacy. You can be a guide to the resources that can help them optimize their estate planning. This is a way to troubleshoot and cut off problems before they happen by guiding that transfer of wealth, which you can be a part of, and playing an ongoing role as a resource, not only to the initial client, but throughout the family and friends that are touched by the estate process. So, what I want to do is go through two sections of this. I want to go through wealth transfer strategies, and then I want to talk about what everybody should have in place with their death file, an actual file that should be in place to alleviate the burden of when someone passes, and then the family members have to start scrambling to find the scraps of paper and information to piece together what is the estate and what are all the elements of it, and how do we access that. So first, wealth transfer strategies. Let's start with the estate tax threshold. Currently, 2025, at the individual estate maximum without having to pay taxes, estate taxes, is 13.99 million, and for an estate together as a couple, it's 27.98 million. The extension of the trunk tax cut plan, which is highly likely in 2025, would keep these levels in place and probably see them continue to increase year to year. Wills and trust. This is the foundation, the building block of the estate plan. Having an up-to-date will in place, establishing trust correctly to keep protecting and managing the transfer of money, assets, is just an important part of this. Without this, in essence, you're putting yourself in a position where the deceased would die intestate. Without a will in place, that means that the courts are going to decide through the probate process the disposition of assets and how it would be allocated. So you want to make sure that these wills and trusts are in place to not only make sure that you're, as the deceased, the estate wishes are being met, but that you're protecting those in the family that are going to be receiving these assets so that they're not squandered, they're not taken advantage of. Inherited IRAs. This is something that not a lot of people take advantage of, the fact that you can structure how your IRAs will pass to your beneficiaries in your death. So as part of your estate, the IRAs can be structured to pass to your beneficiaries, and do it in a way to maximize the tax consequences of the beneficiaries through IRA trusts that can be set up for each of the beneficiaries. Then taking advantage of gifting. For anybody with an estate while they're alive, as an individual, they can be giving $19,000 a year gifted annually to any individual in their family, one individual to another at $19,000 a year, or a couple can gift $38,000 a year to every member of their family, reducing their estate tax burden in the future and providing a portion of the estate to while people are alive without any tax consequences. This lifetime gifting cap is equal to the estate tax threshold of the individual, or twice that for a couple. So this will factor into the ultimate estate tax threshold, but you're able to start distributing some of the estate value while that person is alive to your ultimate heirs and beneficiaries. Family limited partnerships. So a partnership can be established to make sure that the owner of a business remains the managing partner, and then interests are transferred to family members who are made partners on an annual basis following that gifting and estate tax guidelines to avoid any tax consequences. So a portion of the value of a business or assets can be passed to family members while that person is still alive through a family limited partnership. And then an annuity trust can be set up. It's called a GRAT, that will generate a level of income to the grantor, the person who sets up the annuity, until the remainder can be transferred to the beneficiaries tax-free in the future. So an annuity could be set up to generate some income to the grantor, and then at some point, the remainder of it will transfer over to the beneficiaries tax-free. This is another strategy to be able to move estate money while the person is still alive, inside the estate tax limits and thresholds. Insurance, another sometimes overlooked aspect of an estate. Insurance is oftentimes really looked at as a financial risk mitigating strategy while people are alive. If they were to die, this would help protect the family as they went forward by replacing their income. So you're in a life insurance policy, a whole life policy, a universal life policy, you can be building up value tax-free and then paying out that death benefit to beneficiaries tax-free. Some policies also can be converted to cover critical illness and long-term care. And that's a way to help preserve an estate instead of drawing down on income and assets to address expensive long-term care costs. Policies could be purchased or annuities could be set up that could then be used for those purposes, preserving the value of other assets, investments, and income. And we also know, obviously, that for those with a life insurance policy that doesn't have, say, cash value in it, or a small amount of cash value, it could be potentially settled for a cash settlement while they're still alive. That could be put towards income and estate needs or put towards long-term care needs. So insurance, as well as annuities, which can provide a guaranteed income for the remainder of that beneficiary's life. So if there's going to be estate dollars that are passed forward, one way to pass them forward is through an annuity, which protects the money, establishes a lifetime income, particularly for, say, younger beneficiaries or beneficiaries that are not financially astute, or in a position to be able to manage their life, their income, in a manner that would preserve the value of the state. This is a way to protect that through an annuity, protecting them not only from their own potential mistakes, but also poor market performance, poor investment performance that they might put the money into otherwise. So remember, when it comes to estate planning, we always say it's the duty of everybody in this country to build up as much wealth as they can, to live as fulfilling a life as they can, but to make sure that they are put in a position to also pass through to their beneficiaries, to their heirs, as much of their estate as possible, in minimizing the tax impact of that, so that they're getting as much of the benefits of their life's labor versus the IRS. Now, I want to spend time for a few minutes going through about 10 points of how to create a death file. And I've seen this numerous times, and quite frankly, I have one in place, because the impact of a death on family members, where the paperwork is not in place, where things are a mess, where the parent, the loved one who passed away, kind of keeps that stuff secret, says, I don't want my family to know about this stuff. This is my business. And then they pass away. If you don't have everything in place, not only during the process of maybe failing health, failing cognition, becoming incapacitated, and finally death, you can create a huge mess for your family that is not only a logistical mess, but an emotional one and a financial wreck in the end. And just basically having your act together with advanced planning directives that make sure that people understand what your wishes are in the case of long-term care, emergency medical care. If you're incapacitated, you want to have a death file in place that contains all of the documentation so that when the time comes and your family should know where it is to get it, they can dig that out and everything is there, everything is laid out for them, and it's going to be a much smoother process, a much less traumatic process, and a much more fiscally sound process of going into the estate liquidation steps of going forward. Number one, in your death file, you want to have the contact information for your doctors, attorneys, financial advisors, and accountant. Have a sheet with names, numbers, and email addresses for these key people to be able to be contacted. If I didn't have that in place and I were to pass away today, my heirs wouldn't know who to contact in any of these fronts. But I have all this information contained in one spot where they can immediately go to it. In there, I also have written instructions around any kind of specific requests I have for care, preferences, locations, the type of care I want. If I were in a position where I wanted home care, I have that specified. Not only that, but I have in place medical power of attorneys, naming specific people to manage my health care if I'm unable to do that for myself. Again, doctor's contact information. I also have do not resuscitate, do not intubate orders in place. And that is up to the individual person, but putting in place a medical power of attorney allows you to dictate what would happen in the case of a medical emergency where you may not be in a position to speak for yourself. You also want to have in place and in your death file financial power of attorney, naming the right person to handle your financial matters when you get to that point where someone else would be in a position to execute upon your wishes that you have laid out. You want to have your will and trust documents in place. Any additional special instructions like the disposition of personal effects and property. A lot of times a will doesn't specifically specify what you want to do with things like a valuable coin collection, a collector's car, all sorts of different things. You want to make sure furniture and maybe clothes, whatever it is, if you want to make sure that those are distributed correctly to your wishes, you're going to need to have it in writing and spelled out, or someone else is going to make those decisions about what to do with things you've acquired over a lifetime and have great value and could have a lot of value to your heirs. You want to have in your death file your mortgage statements, and any deeds for any real estate you own, your home, any other real estate. Have that information in your death file. You want your bank statements for all of your accounts. And even if you have things like a safety deposit box, anything like that that is related to bank accounts. And if you have multiple bank accounts, it could be checking accounts and then high yield savings accounts. You could have a money market account at another location. All of the different banking accounts and statements in one place, as well as mortgage loan. If there's a reverse mortgage, you want to have that reverse mortgage information in the file as well, because the family's going to have to act on that once your estate is being attended to. Not only bank account statements, but your retirement account statements, including things like if you have IRA trust docs that you've put in place for your heirs. You want to have all of your insurance information in place, health insurance or your Medicare coverage specific information. If you're a veteran and receiving veterans benefits, you want to have statements and information of all that in place. All of your insurance, because there are life insurance policies, long-term care insurance policies, any form of insurance as well as annuities, make sure there are statements for each and every type that you have in your death file. And if you've done anything with prepaid funeral plans, final expense policies, a funeral trust, anything like that, make sure that's in there because that's going to be very, very valuable to have at the time that becomes an issue to be addressed. Making sure that those documents are in place are going to be very, very beneficial to the family, as well as if you have any special directions for funeral arrangements. And I'll give you an example. My mother passed away this past summer. She wrote in meticulous detail exactly how she wanted her funeral to go. And we followed it right down to having a two-piece Irish band, a guitarist and a violinist came to the reception, after the funeral, and played, and the very specific kind of food she wanted served. Everything was all laid out, and we followed it to the letter. And it was very much our pleasure to know we were doing exactly what it was that she had wanted and had taken the time to lay out in exacting detail for us, which I bet for many of you, you might recognize that kind of a tendency from one or more of your parents. And then this is one that often gets overlooked and turns into a real hassle for families. This is the final item I have in my death file, and that's login information for social media accounts, streaming services, subscriptions, that stuff that hangs out there. When it comes time to turn that stuff off, you want to have the login information to be able to do that. There's so many legacy social media accounts out there for people who are deceased. I know people who have been dead for pushing 10 years, and their Facebook account is still sitting out there, just sitting there. And the family just didn't have the information to shut it down and didn't want to go through the process of trying to petition Facebook and go through everything they would need to do to try and eventually get it shut down. So it's just sitting out there, languishing, with the potential that it could be hijacked at some point. And you want to make sure that you're able to shut those things down. So in conclusion, organizing, clearly communicating what you want, what your clients want, is so important as part of the estate planning process. You want to eliminate the mistakes that can come, the miscommunications, the misunderstandings. If you pass away without your wishes, not only expressed but legally documented, you're leaving this in the hands of family members, and you're also leaving it in the hands of the court. State probate court will jump in, and they will decide how to take care of your estate. If you haven't done it in advance, you want to make sure that you are clearly articulating this for yourself, and just make sure that as advisors, you're helping to guide your clients towards and making them aware that estate planning is a really important part of the retirement planning process and living in retirement. And the more you can help at least guide them to the right resources, if not be part of being the right resources, the more opportunities you're going to be creating for them and for you. And that's what this is all about. Always with what we're talking about, we're always trying to give more information, more ways to be more value added, to be recognized more as a part of the team, as a solution provider, and not just somebody who's selling the product of the week. So happy to provide all this information to you. We have a white paper on the generational wealth tsunami estate planning strategies, as well as a copy of this PowerPoint. As always, we're standing by to work with you folks. Appreciate you joining us every month for our study group sessions. Our study group itself keeps growing and growing. We're at almost 1,000 members of our study group today. And we're very, very proud and pleased about that, about all the participation we get, all the feedback we get, all the agents, advisors, people who work in the long-term care space that are reaching out to us with questions. We're happy to answer requests for information. We're happy to provide. clients that we're happy to help you work with, give us a call, 866-602-5000. You can always email me directly, chris@retirementgenius.com. Invite you always to visit our advisors only website, our consumer facing primary website, retirementgenius.com. And until we talk again next month, thank you for joining us on the Brainstorm Study Group webinar. We hope you'll take all this information, incorporate it into what you're doing, and we look forward to talking to you again next month.